liquidity and point of interest. That's my strategy. When I open up my charts, the first thing I look out for is the market structure. Second thing I look out for is my liquidity, and then the third thing is the point of interest. That's the only three things I pay attention to when I open up my charts. So I'm going to take market structure first, then I'll take liquidity, then I'll take point of interest. I will take one point of interest in this class, that is order blocks. Then in the next class, I will take breaker blocks and order blocks, differentiating between the two of them and knowing when to use knowing when to use any of them, knowing when to use the order block and knowing when to use the breaker block. So what is market structure? Market structure is the current behavior or condition or the flow of the market. That is what market structure is. Like when market moves from a point to another point, that pattern the market follows to approach that particular point. That is what market structure is. So if for example you're traveling from this place to that place, did you walk in a straight line? Did you walk in a zigzag line? Were you understand that particular structure or the flow the market to approach that particular point that is going to? That is what market structure is. So market structure is the current conditions, behavior, or flow of the market. So that's what market structure is. Now there are three types of market movement. Now, so there are two types of market movements. There's the trending market and then there's the ranging market. In the trending market, that's when we have uptrends and then the uptrends and downtrend. And then the ranging market just a consolidation. So there are two types of market movements. There's the trending market and the ranging market. So there are two types of market movements, the trending market and then the ranging market. In the trending market, that's when you now have the uptrend and then your downtrend. So for your uptrend is when market is making a series of higher highs and higher lows. It means that for each high that market has, the next high is going to be higher than it, and the next one that comes up is going to be higher than it. And for each low that comes up, the next one is going to be higher than it. So it's basically market trending up, making a series of higher highs and higher lows. That is something like this. This is what signifies an uptrend. Higher highs and higher lows. Higher highs and higher lows. Higher highs and higher lows. So this is what an uptrend is. Then for a downtrend is when market is making a series of lower highs and lower lows. So that's what a downtrend is. So lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, lower highs and lower lows. This is what a downtrend is, and this is what an uptrend is. So uptrend, downtrend, and then the third type of market movement is the ranging market. So ranging market looks a bit like this. It's when market moves from one range to another. So it can be from market moving from your support to the resistance, from resistance back to support, from support back to resistance. So this back to here, then from here back to here, from here back to this, then from this back to this. So this is what a ranging market is, a consolidation. It means the market is not trending in direction. So a range. So these are the three market movement types: the uptrend, the downtrend, and the range. When market is approaching a particular direction, a particular point, there's always a particular pattern that it follows. It's either in an uptrend or a downtrend or in a range. It moves similar to these three types of market movements. So this is an uptrend, this is a downtrend, and this is a range. So on the chart, you can see an uptrend like this. The chart, this is an uptrend here. Markets making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So this is an uptrend here. This is an example of an uptrend right here. This is an uptrend. Then for a downtrend, this market making a series of lower highs and lower lows, which you can also see from here. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. So this is a downtrend right here. So then for consolidation, do I really have a consolidation? Let me check and see if I have markets been on a consolidation. That's market being in a range, not really moving from any, that is just from one point to another. That's what a consolidation is. So let me check. Well, it's not really clear, but this is the consolidation right here. You can see markets moving from there, here. This is the consolidation from this resistance level down to this support zone, from this resistance level down to this support zone, from this resistance level down to this. So this is what a consolidation is. You can see it's not trending high, neither is it trending low. It's just in a particular fixed range. That is what the consolidation is. That's what a range is. Majority of the time, when there's a consolidation, you start waiting for market to break out to any side, and that's the side they're going to take your trade in that direction. So I've mentioned what market structure is. Market structure is the current behavior, condition, and then the current flow of the market. And I said that there are three market movement types. We have the uptrend, we have the downtrend, and we have the ranging market. So that being said, let me now mention the two things I pay attention to when I look at my market structure part of the strategy. There are two things I pay attention to. There is the market structure shift, and then there is the break of structure. So for the structure part of my strategy, for the structure part of the strategy, I pay attention to market structure shifts and break of structure. So market structure shifts. So I'll first of all take what market structure shift is. So market structure shift is an indication that the current trend is about to end and the new one is about to begin in the opposite direction. What do I mean by that? When market is on an uptrend, that the behavior of an uptrend is series of higher highs and higher lows. Here you can see this is the higher high. I will signify that with HH, higher high. And this is the higher low. Also with HL. This is the higher high. This is the higher low. This is the higher high. This is the higher low. So what do you notice? Each candle that forms on the high side is always higher than the last one. Higher high, higher lows. Next one that comes is always going to be higher than this previous one. Higher high. Then each low that forms is always going to be higher than the last one. So this is the characteristics of an uptrend. That is what it means for market to be on an uptrend. So what do I mean by a structure shift? A structure shift is when market now deviates from that current characteristics of its trend, now change to the opposite direction. This is what I mean now. You know the characteristics of an